ladies and gentlemen. Max Capital again here with a breakdown of a gold setup that we took about 2 days ago. So we'll be reviewing the reasons that made us sell this pair based on the strategies that we trade, of course. This trade setup delivered a 12R over 300 pips in total in two trades. Now I'm also going to show you guys how to make multiple entries on the same trade setups using the right kind of risk management, because yeah, that's what we preach every day here. Because as you know, guys, without the right risk management, at the end of the day, you won't be able to be on the right side of the market or make money in that sense. Without wasting a lot of time, so this is the after and before. Let me go through before trade setup. It's where is it? It's right here. I hope you can see it now on your screen. So this is what the setup looked like before. As you can see, we had bearish order flow, low lows, low highs, low lows, low highs, low lows, low highs. And when the market is bearish like this, we'll be looking to take the trades on the supply areas, um, in respect, of course, to the direction of the market, because as you can see, the impulses were to the downside. So we anticipated. So what happened here is that the market came to mitigate the era of 1907, and when it made this impulsive push to the downside, broke structure on the left hand side with this change of character. We also have more liquidity here, which was this was the AR Asian range. So we had more liquidity on either side of this market. So that was the first entry, which was taken here around 1906, 1907. And the second trade was taken around 1905 at the expectation of the mitigation of the supply area right there. Maybe let's go on to a chart to see things much clearer, so to speak. Right. So there we go. And I think it's also worth mentioning that this push to the downside was influenced by the dollar index, this push to the upside by the dollar index. As you guys know, we use correlations heavily. And hopefully in the next couple of days, I'll post a video about correlations. So yeah, maybe from a daily perspective, just to show you guys, sorry for a second, just to show you my overall bias here. I'm looking to buy gold at around 1850, right? So this is where I'm looking to buy gold. So I also recognized the bearish order flow that was happening here, hence I took advantage of it. Let's go back to 4-hour time frame. So yeah, as you can see, guys, it's very important to be able to determine the trend. Anything that follows from there increases the probability of your trade if you got the trend right. So I was spotted lower highs, lower lows, lower highs, and more breaks of structure to the downside. And as you guys know, that's a sign of a bearish market. So we were just looking for a point to commit, especially after the market had made this kind of price action in this form of this candle. So you can see small rejections on the upside, meaning small order flow pressure from the upside. We have more supply in this instance, greater than the demand that was available in the market, hence the market pushing to the downside. So yeah, let's look at first entry. Maybe step down to 15 minutes. Yeah, like I said, so we had this leg. What I did here is that I drew my flip like that. So we had that reaction at a nice premium area. Price push to the downside. So I wanted to take advantage of the second entry here. Maybe let me change the template. So how did I find my supply area, you ask? It was through, excuse me for a second, let me remove this. How did I find my supply area? I mapped out this last buying candle before it dropped to the downside. So I was anticipating the market to come back there. Another part of me was looking at this one right here, but to be safe, I wanted to take the big one from open to close, from opening price to closing price. As you can see how nicely it tapped into that, took out some liquidity on the upside, then pushed down lower again. When pushing down lower, I changed character. As you can see here, we're making high lows, high highs, high lows in this minor internal structure. So once we changed character there, and there I was expecting my second entry. Maybe let me change the template so that you can see. So from this range, I anticipated the market coming back there, and look at the reactions, and I just moved down with it until it reached target profits. That's it for this trade recap. Really, it was a nice setup. I really, really, really enjoyed. I haven't had such movements in a long time in the markets. I'm still anticipating more push to the downside. Maybe to remove this, to come up with new analysis. Let's go back to the 4 hour time frame. Let's change this template to supply, because remember, we don't do our analysis on smaller time frame, because on a smaller time frame there's a high chance of getting the direction wrong, which basically lessens the probability. So now we have a bigger break of structure here. So I was just looking at this as a liquidity point. Yes, we've taken that liquidity, but things have changed now. So this to me looks like a liquidity point. I mean, a break of structure. So once again, you can pull your fib, you can pull your premium versus discount tool. So here I pull my premium versus discount. So this means if I'm looking for selling opportunities, it has to be in this premium region. If I'm looking for buying opportunities, it has to be in this discounted region. And right in the middle, we have equilibrium. Now, this is a basic principle of price, right? So with that said, let me step down to a 1 hour time frame to see if I can get a supply area to sell from when the market returns. So generally, this is the candlestick. This is the last candlestick before the drop to the downside. So I'm gonna be focusing on that going forward. Move that. So yeah, let's see. Let's see. Markets are showing me that there's a high chance of us going back up there. So to these areas, let's check it. The T. Some time frames, I normally trade daily for hour and 15 minutes. Some the other time frames are just there for me to confirm certain things, because if I find an order block or a supply area lining up several times, that's an advantage. So this is the I'd like to go with now. Come on, there we go. So we have break of structure here. So what are we anticipating next from gold? Let's look for more selling opportunities. Okay, I don't want to take too long. Always try to do these videos under 10 minutes. With that said, ladies and gentlemen, please leave me a comment in the comment section if you'd like to get involved with our daily live trading stream in our private rooms. And yeah, let's try to let's trade together. Let's trade the market. And you'll realize that here we do not really care much about how much you made, but we look at the percentage. We try to detach from the monetary aspect of things, because that brings about a lot of emotions into your trading. So yeah, and we also have that lower high, yeah, lower low here. So we're operating from this leg. Okay. I think I've said too much, ladies and gentlemen. Contact me if you want to enroll the course. We're currently running a promo Cost is $350. But if you can register on the link in the comment section below, all you have to pay is